All right. Hello, everyone, and welcome in. We're going to give everyone about 30 more seconds and then get started with the presentation. All right, let's go ahead and get started. Hey, everyone, and welcome to today's educational webinar on student loan debt and refinancing for the New York State Bar Association members. My name is John Harold, and I'm the account manager for SoFi's partnership with NYSBA, and really excited to go over today some great things for you guys. So this presentation will last around 20 minutes, and we'll start with an overview of the U.S. student loan crisis, so how we got here. It will then go into how the U.S. government is helping student loan borrowers, so as it relates to COVID and potential relief coming. And then going into the options for those pursuing loan forgiveness and repayment. And lastly, the benefits we have for New York State Bar Association members. Following the presentation, we will do a Q&A. So if you want to, whether type them into the questions box throughout the presentation or ask them live at the end, I'm happy to answer either way. So getting into it, I always like to start with, how do we get here? So US student debt has really become a crisis over the past 20 years. I mean, you talk to your parents, your grandparents who went to school, and they say, you know, when I went to school, a semester of tuition was about $800. And that obviously just isn't the case anymore. And what's driven that is a significant reduction in funding from both federal and state level of universities. And conversely, it's also been the federal government just guaranteeing student loans to allow people to borrow for school. So college is seeing this, knowing that people are taking out loans that are guaranteed by the government and just increasing tuition exponentially. And unfortunately, our generation has bear the brunt of that, where student loans have become the second largest form of consumer debt, surpassed only by mortgages. So this has really accelerated over the past 10 years. There's over $1.6 trillion of student loans outstanding. Over 43 million Americans hold student debt. 69% of students from the class of 2019 took on debt, and the average debt for law school graduates is just over $145,000. So you can look at one of those numbers, you can look at all of them, but clearly alarming. You know, going to school for 4 years, law school for 3 years, not thinking about repaying your student loans and what those payments hit, it's a really impactful thing on your life, especially in a negative way. Going below, you can see, you know, how it's broken out. About 93% comes from the federal government, and the remaining comes from private lenders. So that's typically banks or credit unions who issue private student loans. So SoFi offers them, Sallie Mae, Wells Fargo, etc. For those of you who have student loans, you probably recognized, if you have federal loans, there has been some relief. And, you know, rewinding back to March of this year, COVID was obviously spreading across the United States. Businesses were shutting down, unemployment was spiking. And when you lose your job, the last thing that you want to do is repay your student loans. There are much more important things: paying your rent, buying food, supporting your family. So what the government did is, when they passed that multi-trillion-dollar stimulus deal, they included an important provision to help and provide immediate relief for student loan borrowers. So as part of that, they suspended payments on federal loans. So what was originally through September 30th of this year got extended to December 31st of this year. So now the end of this month, where if you have federal student loans, your payments were suspended during this time frame, which is great. You're not on the hook for your payments. What's more is they also waived interest during this time frame. So instead of, you know, going into you know, a deferment where your interest is accruing during this time frame, the interest is waived, so it's not accruing and you don't have to be on the hook for your payments at all. And if you do want to make payments, it goes directly towards the student loan, towards the principal, to help you pay it down sooner. A few other caveats. So unfortunately, this pause did not apply to private student loans. So for those who had taken out with Sallie Mae or Wells Fargo or refinanced with SoFi, that does become a private student loan. And unfortunately, private lenders, they can't print money like the government does. So they weren't included within the stimulus. That being said, a lot of private lenders did offer their own type of forbearance policies. So, SoFi offering up to 60 days of a payment pause with the option to extend if you've been impacted, just to provide some sort of relief. A few other points. So there's no garnishment of wages or Social Security during this time frame. So if you did go on default in your loans, typically after, let's say, 6 to 9 months of not paying, typically the government will come knocking on your door and start collecting, garnishing your wages as well as Social Security. So during this time frame, they're not doing that, thank God. And then most importantly, for those who are pursuing public service loan forgiveness, one of the criteria is for you to make 120 payments towards your student loans. And during this time frame, with the payments suspended, those months will actually count towards your qualified payments. So, what's encouraged is to just not pay your student loans during this time frame, because if you're pursuing it, then those months will be counted. What has been considered, and to say there's been a lot of movement from the political space over the past month or two would be an understatement. But, back before Biden was elected as president-elect, there was the HEROES Act that was proposed by the House, and it was actually passed by the House. It was not yet passed by the Senate, but what they proposed was first expanding that payment pause and interest waiver on federal loans. So it would include all federal loans. So with the initial one, it didn't have federal Perkins loans as well as FFELP loans. So now it would expand to include that and extend it, what was originally the September 30th, another year to September 30th of 2021. Additionally, wanting to give some sort of loan forgiveness, we've heard from the far side, loan cancellation, loan forgiveness. So within this act, canceling or writing down $10,000 in federal student loans per borrower, or the outstanding loan balance, whichever is less. And if the borrower does not specify, the loans with the highest interest rates will be forgiven first. So providing some sort of short-term relief, especially if people haven't been making payments during these 6 to 9 months since the CARES Act went into place, being able to knock down that debt, which in parallel can stimulate the economy and give people, some funds to apply towards other things. Within this, they did include that payment pause and interest waiver for private student loans. So the U.S. Treasury will make payments on private student loans through September 30th of next year, with the payments capped at $10,000, and interest will not be capitalized during this time period. And then loan forgiveness for private student loans. So forgiving up to $10,000 in private student loans per borrower, or the outstanding balance, so similar to that second point here. And then some other provisions, not resetting the clock on public service loan forgiveness, and expanding some of the repayment plans. So a lot of different provisions. With the movement in the political office, there's obviously, it's been talked about almost on a daily basis. So if you Google student loans, there's different proposals, but this is looking to mainly extend that payment pause and provide some sort of forgiveness. So for those of you who have federal loans, as I mentioned, they account for about 92% of the student loan market. And, when you take out a federal loan, there are some different considerations around them. So around repayment terms, deferment and forbearance, forgiveness programs, and income-driven repayment options. So I'm going to touch on all 4 of those. For repayment terms, the standard term is 10 years or 120 monthly payments, and that's where the payment will stay constant each month. There's also graduated, where it's the same amount, but your payments start lower and then will get higher over time, which is nice if you're not making as much as you'll make in 10 years, which a lot of people won't. There's also extended options, so an extended fixed, where your term is up to 25 years or 300 monthly payments. Your payment amount is going to be lower each month, but you're going to be paying more interest over that 25-year duration, which is a long time. And then extended graduated. So for those who wanted to do that graduated type of option where it increases over time but starts lower, you can choose a 20-year graduated extended term. For the terms deferment and forbearance, they get thrown around a lot. Deferment is where the repayment of principal and interest is temporarily delayed. So similar to what we're in right now, where Federal student loans are deferred until the end of the year. And then forbearance is same thing, but instead of your interest being waived, your interest is going to accrue during this time frame. So if your loans are in forbearance, your payments are paused, your interest is accruing, and then once you go back into repayment, an event called capitalization happens. So that's when that interest that accrues during that time frame gets added to the principal, and that's your new principal that you're going to be paying once you start making those payments again. For forgiveness program, for those lawyers and attorneys on here that are currently pursuing public service loan forgiveness or thinking about it, what it is, it's not a repayment plan, but an option you can work towards while utilizing, whether it's an income-driven repayment plan or a standard repayment plan. With this type of program, there are strict criteria that you have to meet to have your loans forgiven. So the first one is having eligible loans. So only federal direct loans not in default are eligible for PSLF. You also have the eligible payments. So as I mentioned before, 120 on-time, full scheduled monthly payments under one of the eligibility repayment plans. The payments, they don't need to be consecutive. So let's say you graduated undergrad, made payments for 2 years, and then decided to go back up to law school and then continue the payments after that. Then that works as long as those payments are made after 2007, which is a while ago from this date. Eligible payment plans, so income-based repayment, income contingent repayment, pay-as-you-earn, revised pay-as-you-earn, and most commonly 10-year standard repayment plans are all eligible. And lastly, job, which is arguably the most important, that you must do full-time work with whether a government organization, federal, state, local, tribe, a 501c3, tax-exempt nonprofit organization, and some other nonprofit organizations. So this was packed back in 2018, and with the 120 monthly payments, it made 2018 the first year that people could have their loans forgiven. And the numbers didn't really improve year over year up until last year. So of the 91,000 applications that came in as of September 2019, only 845 applications were granted public service loan forgiveness. So about 1%, which is extremely discouraging. People, whether they had the incorrect loans, didn't make full on-time payments, didn't work for the right type of job, were disqualified for this program. So that's why you see it in a lot of the rhetoric from both political parties of wanting to make this program a little more robust and accepting for those who are eligible. For income-driven repayment plans, what this does, and this is really helpful for those who, let's say, you go to law school, you take out the average of $140,000 of student debt. But let's say you go work for the government and you're not making that high of a paying job, but obviously you're on the hook for such a big loan balance and those payments come due. So how are you going to pay, 60 or 70% of your income towards your student loans and have a legit life? So what an income-driven repayment plan does is it pegs your payment towards a proportion of your income. So generally between 10 and 20%. And typically with them, you'll have to, portray some sort of financial hardship. So what that means is the annual amount due on your loan payments must exceed either the percent of the difference between your adjusted gross income and 150% of the poverty guideline for your family size and state of residence. With these, you have to maintain your eligibility. So you'll have to recertify your application annually or of your payment with the default, or it will default to the standard repayment plan and interest capitalization will occur. There's also tax implications. So unlike public service loan forgiveness, when you have your loans forgiven, you're not on the hook for any of the taxes. With the income-driven repayment plans, you can have your loans forgiven after a certain amount of years, but that amount that's forgiven will be subject to taxation during the year of forgiveness. So it's important if you are considering doing that long route to consult with a tax accountant just to make sure that it makes sense for you to do that. The different types, I mentioned those, but you can read them here. And really, for those who, if you're not sure if you want to do student loan refinancing, income-driven repayment, or loan forgiveness. So on the left side, if you do have that low salary but have that large loan balance, then a great option is the income-driven repayment. You base the payments on your earnings and family size. It's only offered on federal loans, so something to consider. If you have private loans, you're not going to be eligible for. And then the balance can be forgiven after 20 or 25 years of payments. So while it's nice to have the balance forgiven, a few other considerations is you're going to be paying more interest over time, and that amount that's forgiven is going to be subject to taxation. In the middle, if you're a public interest lawyer, a great option can be the loan forgiveness program. So whether it's public service loan forgiveness, LRAP, and ASLRP are multiple programs that support this, the latter two more relative to attorneys. But you can have your loan balance forgiven based on strict eligibility criteria. And you can't just only use one, you can use each one that you qualify for. So if you want to do PSLF and LRAP, that's totally fine. The last option is if you're a high earning lawyer in the private practice, and by high earning, meaning you make more than what your student loan payments are, then a great option is student loan refinancing. You can save money by lowering your current rates. You can consolidate all your loans into one single monthly payment. And an important consideration is you will lose your federal benefits via refinancing your loans. So right now with the suspension, if your loans are suspended, then a lot of people aren't refinancing until that suspension ends. You probably heard the term consolidation before, and this comes with federal loans. So direct loan consolidation, what it is, it's a government program that allows you to combine multiple federal education loans into a single loan. So if you've taken out loans over the course of your education and you're paying 3 different servicers and it's extremely hard to manage, with direct loan consolidation, you can consolidate all of those into one. Unlike refinancing, they'll take the weighted average of the interest rate. So if you have three $10,000 loans, one at 5%, one at 7%, and the other at 9%, then your interest rate is going to be the weighted average of 7% of those loans. If your monthly payment does decrease, it's likely that you're going to be lengthening your term and paying more interest over time. For student loan refinancing, the difference is you technically are consolidating your loans when you refinance. If you're refinancing more than one, you will ideally receive a lower interest rate, because with refinancing, what lenders, they're looking at your credit score, your free cash flow, your payment history to hopefully give you a lower interest rate than you're currently paying right now. And interest rates are based on what interest rates look in the economy. So right now, interest rates are the lowest they've been in at least a couple of years, and that is reflected within SoFi's rate and some of our competitors as well. And with refinancing, whether you want to consolidate both private and federal loans or just pick and choose, you can do that. As I mentioned, for refinancing, the main goal is to save you money. So obviously the savings will be dictated on how large your loan balance is and the difference between the interest rates that you're paying. So someone with a $10,000 loan going from a 5 to a 4% interest rate is going to be saving less than someone with a $150,000 loan that's going from an 8 to a 4% interest rate. For rates, as I mentioned, the lowest they've been in a couple of years. We offer both fixed and variable rates. Fixed meaning it'll stay constant over the life of your loan. Variable means it can fluctuate depending on how interest rates do in the economy, but it'll likely stay pretty low for the next couple of years. But most people will choose a fixed term just because it gives you that peace of mind that it's going to stay constant over the life of your loan. For terms, very flexible. If you wanted to pay off your loan sooner and get rid of it, you can refinance to a 5 or a 7-year term. Just know that your payments are going to be higher because you're paying it off sooner. If you're struggling to make ends meet, you can stretch it out to a 15 or 20-year term, but similar to the income-driven repayment plans, you're going to be stretching out that duration and paying more interest over time. Right in the middle and the most average is the 10-year term. So most people choose the 10-year fixed because that aligns with how a lot of their student loans came as before. There are no fees, no catches, so no origination fees, application fees, and most importantly, prepayment penalties. So a lot of the times we'll see attorneys, they'll refinance to a 10-year term and they'll end up paying it off within 3 or 4 years as they get raises and bonuses over time. From a convenience standpoint, it was more popular a year ago, but you can consolidate and refinance both your federal and private loans into one loan. Now you can just pick and choose whether you want to just refinance your private loans, since your federal loans are suspended until the end of the year. But overall, the experience is very easy. You just go to sofa.com/New York or NYSBA and can check your rate within 3 minutes and finish your application within about 20 to 30 minutes. And through our partnership, we do offer a limited time cash bonus, so $599. It's normally $300, but this is offered through the end of the year. And I know it's tough with the federal suspension going through December 31st. There's uncertainty if it's going to be extended. All you need to do, you don't need to refinance before December 31st. All you need to do is just start your application by then. So what you could do is start your application now, see what rates you qualify for. If they look good and you have federal loans that you want to refinance, you can wait and to see if it's going to get extended. We'll lock in your rates for 60 days and you'll have that $599 tied to your account. Lastly, we do offer Parent Plus loan refinancing as well. So for those of you who are parents and have taken out loans for your children, you can either refinance those loans in your own name, or if you want to transfer the debt to your child, they can start the application, receive the $599 bonus, and then refinance the loans into their own name, which will then liberate you from the debt. Once you become a SoFi member, whether it's through refinancing or taking out one of our other products, you do become a member for life, and we do have some robust benefits at no extra cost. So most importantly, for those affected by COVID, we do offer loan forbearance and deferment. So you can apply for payment deferral up to 60 days with the option to extend if you've been impacted by COVID. We also have unemployment protection. So if you lose your job at no fault of your own, we can suspend your payments for up to 12 months. And we also have career advisory services through our partnership with Korn Ferry. So whether that's resume review, job placement assistance, all through Korn Ferry. SoFi also has certified financial planners. So whether you have a question of, should I do an income-driven repayment plan or should I just refinance and pay it off sooner? Our certified financial planners can take into account your loans and help you walk through that decision-making process. And even beyond student loans, whether it's, how much should I be putting towards my 401k? How much should I put on a down payment with a house? They can help with that. We also have a ton of education and content. If you go to sofi.com/learn, articles, resources, tools, and calculators, consistently putting out fresh articles based on the political movements around student loans. So, how the Trump versus Biden plan looks, what the probability of forgiveness can all be found there. And then also saving and investing for emergency funds. We do have SoFi Money, where you can put money into an emergency savings vault, or if you wanted to start investing, you can do that with SoFi as well. And this is the last slide here. So we've walked through the US student loan crisis, how the government has helped, what they're planning to help, the considerations for federal loans, some of the benefits you get as New York State Bar Association members. If you do decide to apply or end up refinancing with SoFi, our customer support team, we have over 600 representatives, are available 7 days a week to help you, whether it's via phone, email, or live chat by going to sofi.com/NYSBA. Again, we're available 7 days a week at the hours listed here. So that's it for the presentation. I will pause here. I've seen some questions come in, so I'm going to read them in the Q&A box, and we'll start answering them in about 30 seconds. So just bear with me. All right, so for the first question, it is, did you say that for those in the PSLF program, the months that were deferred during the COVID interest-free period still count towards the 120 payment goal, even if no payments were made during that period? And that is correct. From March through September, they counted those 6 months as payments towards your student loans. So if you're not making them, it's counted. I can't say for sure if it got extended with the suspension, but I would assume it would, but can't say that confidently. The second question is there a minimum of money we are permitted to refinance? Can the student and the parent both get the bonus of $599 off? So SoFi, we do have a minimum of $5,000. So as long as you have more than $5,000 you'd like to refinance, you can do that with SoFi. It may be $10,000 in some states due to the restrictions. I believe there's about 3 or 4 states that have a minimum of $10,000. So just something to be mindful of. Can the student and the parent both get the bonus? If the student has a loan in their own name and the parent has a loan in their own name, or a parent plus loan, and they refinance those loans separately, then they can get the $599 each. There's other ways you could do it where you at least have to be refinancing one loan per person, and that loan has to be in your name, unless if it's a parent plus loan. So it is possible. But it can't be, if there's one parent plus loan, the parent can't refinance. I guess the parent could refinance it and then the child could refinance it after, but that would just be kind of silly. And then the last question is, I received an email about recertifying my IDR before December 31st. Should I still plan on doing that in light of the possible legislation? That is a great question. And I am not a certified financial planner, so I can't give you what the answer you're looking for, but what I would suggest is, our certified financial planners are great and they deal with these types of questions daily. So if you wanted to schedule an appointment with them, all you need to do, you don't even need to refinance, just, download the SoFi app and then schedule an appointment with them, and they should be able to give you a better answer. But, to the last point, there's a lot of moving pieces, obviously, with the presidential change or potential change. There's different philosophies, so a lot's going to be changing over the next month or two. So definitely keep your eye on those movements. All right. Oh, another question came in. Parent plus loans for several kids. Will you give $599 off for each kid's loans if refinance them all with you, or is the discount per the parent? So what you'll need to do, if you have parent plus loans with several kids, you can't refinance multiple kids' loans together. So what you could do is create an account, refinance one kid's student loans through the New York State Bar Association link, create another SoFi account, refinance the other child's through the link as well, and you can get the $599 bonuses. Or if you want the child to refinance too, then they can do that as well. So yes, it is a possibility. And no, they don't need to be a New York State Bar Association member. This is open to friends and family as well. So as long as they go through sofi.com/NYSBA, they will too be eligible for that $599 bonus. All right, I know we're 1 minute over, so appreciate everyone staying with me. We are recording this presentation, so you'll be able to go back and listen to it. I'll also send over the slides as well, so you guys can have them after. So hopefully you learned something new and beneficial. And if you are considering refinancing, please choose SoFi. With the $599 bonus, it's very rich, especially going into the holidays. So thanks everyone, and I hope you have a great rest of your day.